Hello guys, welcome to the Train Parrot. Today I'm gonna show a very interesting thesis on what could come next for Bitcoin. I'm going to take in consideration not just the daily but also the 4-hour time frame. We are right below the resistance, so this could play out anytime. I'm keeping a close eye on that potential breakout, and we are not going to be naive. We are also going to take in consideration the typical moves of September to look into a few alternatives on how we could perform in September. I'll give you an update on the CME gap from this weekend. What's going on with FAR charts? Are these guys going to be able to reverse the price? We'll look into a new signal coming from spot that hasn't triggered yet but is very close to trigger, that in confluence with a signal coming from perpetuals as well could be a very strong one. Make sure you don't miss that. And I'm gonna share by the end of the video a secret signal that has almost never failed for Ethereum. I am a back holder of Ethereum. I am extremely excited, and I have the feeling that many people are going to regret missing that call. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. As I promise, as long as I get over 100 likes on every single video, I will be sparing some of my time from my holidays to keep you updated every day with what's going on with Bitcoin and what steps I'm taking, my plans for September and October and all of that. Let's get into the content. Both on the daily time frame and on the 4-hour time frame, we are about to hit resistance. So let's have a look at what are those levels, not just on the RSI, but their corresponding prices. On the daily time frame, we can see that we made a high of 58.9, and since then, we're coming back down, respecting this trend line as a resistance. At the moment, for the price to fully hit resistance, it will have to go just 1 point higher in the RSI to a level of 38. If we set the target to 38 and we go into the price, we can see that we have already that level, and it has been resistance in the previous day, and today we are for a second time trying to get above. That price is 54.8k, and if we were to break above this RSI, there's a potential for the RSI to continue going up, heading towards the daily 51 RSI. Just to have an idea of how far we can get in the price, we're going to use 51 in the chart, and we can see that that could take us to 59k. That is not surprising because we spend quite a lot of time using it as a support, and potentially it could become a new resistance. Now, if we look at the RSI structure from the lower end, we can see that if we connect this line with this bottom in here, we get to a potential lower low located at around 27 to 28. Notice that on the 24th of June, we made it to 25. Later, we made it to 26. So next time, if we get to 27, 28, it shouldn't surprise us. And in fact, if this breakdown, instead of happening today, and we first saw the RSI hitting this level and then breaking from a lower RSI, that should provide a much better risk reward. Breakouts after a long journey of the RSI, like this one in here, tend to give a ride with a lot less stress. If we get to those levels of 49 to 46 in here, we could potentially see a continuation below 50, and we can get to 70s or 80s if in October, which is this area here, we manage to get more bullish. Now, let's get into what I wanted to discuss as a potential different way of exiting the megaphone pattern. We got this low in here, this high at 65k, and currently we are in the process of defining a low. This could go way beyond, or it could just stop there and start looking for a high. In my opinion, there are two interesting scenarios that could play out. The scenario number one is if we go straight now, take the 46 and 47k liquidation levels, and somehow, somewhere there, we start defining a change in the structure like this and eventually targeting the top of the channel. Or a second scenario is that the 52.5 was the low, and now we go for defining a high that could take the liquidation levels from 58 to 60k that we're going to look later in the video, see a rejection, and still come back here for the 46, 47. we do not have to go to 46 to 47 necessarily. I'm trying to take into consideration the massive liquidation pools just because they are so heavily loaded that I don't want to take that as a surprise, and I much rather going for a plan where we have a win-win. We win if we don't go there, and we win if we go there. As I mentioned yesterday, we closed the CME gap at 52.9, and if over the weekend we go very low, we have this 52.9 as an insurance price, meaning that we could afford to go as low as necessary and come back up as quick as possible to close that gap, and hopefully from then we can continue going higher. Opposite to start seeing some pump over the weekend, having to reverse all the pump to the upside. If we were to come here on the daily RSI to that level of support, which is 27, let's have a look at where is that in the price. I'm gonna change this now to 27, and you can see that will take us somewhere at 48.8. I'm not saying we cannot go lower, we still have liquidity up until 46K, and remember that this is an RSI daily, so at some point during a day in the future, it could print levels of RSI below this and still close the day above it, and then you wouldn't see anything appearing in here on the days after, meaning that you can still take that 46 and then close above 48.8 or RSI 27, if that makes sense. I also want to emphasize something extremely important. This is the 1st of September candle. You can tell that we have the same pattern that we did an overview yesterday, which is typically in August, we see a pump that gets reversed into September, and during September, most likely you get some drawdown, and that drawdown was around the 5 to 6% in average and the median. And if we were to do something like that, we are already beyond that number. You can see that this is already 6% from there. We weak into almost 8%. And if during September we were to go even to 46K, that will make 20% drawdown. But remember that what this table is registering is the closing price of September, not the maximum drawdown. So a scenario that goes as low as 46 and then by the end of September the price is at 54K, something like this, still qualify for a typical drawdown of September, even if you went minus 20% some point during the month. And I want to make this very clear because on Twitter, I've seen many people claiming that we are already at a typical drawdown and that there is no chance that we can go beyond that, because that will disqualify the typical performances of September. That is just the wrong way of interpreting these statistics. And in fact, we do not have to repeat the same performance of September. Going into the 4-hour, we are seeing some interesting pattern in here. We seem to be forming a double bottom with the intention of challenging the resistance. That resistance currently is located at 42, and we get a nice upside towards the top of the range at 70, and that resistance has been touched just now in the current 4-hour candle. It's located at 54.7, and I think that once we break that RSI 42, we have a high chance that also the price will follow up and break above this trend line, with the caveat that the RSI will do it sooner, because as soon as we are above 54.7K, the RSI will be above 42, breaking the trend line in here slightly sooner than the price does. If we do that, conservative targets for that push up could be anywhere from 57.6 to even potentially getting into 60K. And let's see what the RSI with the statistics has to say that we can reach 71. Let's add 71 to the indicator, and that is telling us that we can get to 59.7. Of course, that is the most aggressive target. The most conservative one is 58.3, assuming that we break above 42 RSI as well. You can tell that we have negative funding rates, and you can see that the cross-fee ratio is once again into the green, which is giving us some additional confidence that we could potentially start challenging this and seeing a breakout on the 4-hour as well. Looking at the liquidity very quickly, we can see that in the very close proximity of the price, we have quite a lot of shorts accumulated in here at risk of getting liquidated. We start with liquidity from 54.5 that form on this area of people trying to short the price, potentially targeting 53.5, which is my last entry. If we go beyond that, we can see that continues to 57, but definitely 60K here is the big winner in terms of liquidation pools, follow but 58.6. So if the price was to take all these levels above it over the weekend, my concern will be that we have a 52 CME gap. And of course, I'm hoping we don't have to leave the door open at the highs to have to come back here to 52.8 to close the gap later this week or later in the month. And on the lower end, things continue the same. Right now, we have some liquidity at 52.1. That was formed with this week that we did to the downside on the 6th of September and started becoming larger with more longs entering recently. But the big party for the shorts starts from 48 to 46. And yesterday we were looking at fire charts. I wanted to have another look to see how things are progressing. Today, I'm not seeing as much volume in the ladder of buys that we talked about yesterday. We saw 70 million yesterday, and now we are seeing barely 58. It's definitely less intense than what we were seeing in January. Today, I also wanted to cover an additional signal that hasn't triggered, but I'm preparing for a potential trigger. Later in the video, I'm gonna give you an amazing signal for Ethereum. So if you are interested in being long in Ethereum, make sure you don't miss that part. This signal I'm going to show you now has to do with spot on Bitcoin, and it focuses on the combined books, in this case when they are between 0 and 1% on spot over 20 million, or when they are between 1 and 5% spot with 40 million across all the exchanges. If we go back in time, you're going to see that it triggers at this top. At this bottom, there is here another signal. There is one here and here. In May, we have another one there. And in January, there is one in here. So it's been pretty accurate. And at the moment, I'm waiting for the signal to trigger. The thresholds are these blue lines. And you can see that now the oscillators are still not getting close to the blue line. So from the point of view of this signal, we still don't have a buy. If I get a buy, I will be the first one to notify you on Twitter. So make sure you following me on Twitter. My handle is Trading Parrot. If we now focus on our signal coming from longs and shorts, from USDT and perpetuals on Binance, you can see that we are for the first time very high above the 70 in terms of the longs, and our signal consists in this oscillator coming back below 70, which we have done repeatedly in the past days, giving us too many false positives in here. That is kind of the behavior that you get in August and September, where the price last year went just sideways. Eventually you got a last signal and we started pushing higher right after that. I already accumulated at these levels, so if we get this signal and we are still at around 54K, I'm not gonna buy again. But if this crosses below 70 and we are somewhere below 50Ks, then I'm definitely gonna consider it as the next DCA entry I'm adding to my stack. Hopefully at that time, we get also the chance to see the spot signal triggering somewhere in here. And I got a new signal that is in the process of confirming today only for Ethereum. This one works with the SOPR, which is on-chain data analysis. People closing at a loss, taking big hits. The last signals that we publish in this channel made on Bitcoin 17.7%, on Ethereum 20%, and on Litecoin 21.6%. I have reviewed these signals many times, but today I'm only gonna focus on the Ethereum one because that's the one that is triggering today. Let's expand this, and you can see that the SOPR oscillator has touched this band in there and exit from above. That is the low band. So let's just focus on the slow signals. Let's hide the fast ones and let's look at the past performance. You can see that we got one signal on Ethereum at 1090, another at 1500. After this scary drop in January, 2,100. This made almost 90% in profits. This one made 40%. And even though you are in a downtrend in here, clearly with lower lows and lower highs, this one is giving 20%. This gave almost 20. So I'm giving you this one, which has the potential to be the entry into October for a lot higher. So at the moment in here, I'm not gonna buy Ethereum. I already have a huge stack of Ethereum, so I'm just gonna continue holding what I already have. But you've been told this is a signal, it's quite powerful, and if you want to see the big picture, take a screenshot of this and convince me that is not a great signal. And a very quick update on what's going on with Total Free. I remind you that yesterday I was quite alarming in explaining that we were breaking the weekly below this trend line, and now we are back above it. Of course, this is a weekly candle. Today we're supposed to close it. So if we close in here at 44, I consider myself happy, because that means that we are recovering the most important support we need to be holding at this point in the market to be able to eventually enter into a very, very strong altcoin season. Bitcoin dominance continues to go lower. It broke below 57. Now it's at 56.7. I'm expecting it to still be able to get to somewhere at least 58 or 60%, maybe in the middle of September. If we get a final flash lower, I'm sure we can get to those levels once again. But the recipe for the altcoin season is to finally print that blow off top of the Bitcoin dominance and break below this trend line. I will keep you updated if that happens, but somewhere in this vicinity is where you want to start accumulating alts if you still think that we have some bull market. Thanks so much for watching. I'll see you on the next one. Bye bye.